Understanding digital gold. A simple introduction to cryptocurrency. Cryptocurrency, it sounds complex, but the idea is simple. Imagine digital money. It's not controlled by banks or governments. You own it completely. This is cryptocurrency. It uses cryptography for security, making transactions safe. Think of it like digital gold. Gold has value because it's scarce and durable. Cryptocurrency is similar. It's limited in quantity and exists only online. Transactions happen on a blockchain. This is a public record of every transaction. It's transparent and secure. No one can manipulate it. Cryptocurrency is still new. It's volatile, meaning prices can change quickly, but it's an exciting world with potential for growth and innovation. Bitcoin and Ethereum, stars in the crypto galaxy. The cryptocurrency universe is vast. Thousands of cryptocurrencies exist, but some shine brighter than others. Bitcoin is the pioneer. It's the first and most well-known cryptocurrency. Created in 2009, Bitcoin paved the way for the entire industry. Ethereum is another major player. Launched in 2015, it's more than just a currency. Ethereum allows developers to build decentralized applications. These applications run on smart contracts, self-executing agreements. Bitcoin and Ethereum are the two largest cryptocurrencies by market capitalization. They represent a significant portion of the total crypto market. Understanding these two giants is crucial for navigating the crypto landscape. They offer distinct features and potential for investment. Your gateway to crypto: setting up an exchange account. Ready to dive into the world of crypto? Your first step is choosing a cryptocurrency exchange. Exchanges are platforms where you can buy, sell, and trade cryptocurrencies. Think of them like online marketplaces for crypto. Popular exchanges include Binance, Coinbase, and Kraken. Each platform offers different features, fees, and security measures. Research is key. Compare exchanges carefully before making your selection. Consider factors like user interface, fees, security features, and available cryptocurrencies. Once you've chosen an exchange, creating an account is straightforward. You'll need to provide some personal information and verify your identity. This process helps ensure security and compliance with regulations. Section 4. Funding your crypto journey: securely depositing funds. With your exchange account set up, it's time to fund it. This means depositing money that you can then use to buy cryptocurrency. Most exchanges offer several deposit methods. These typically include bank transfers, credit or debit card payments, and even cryptocurrency transfers from external wallets. Security is paramount when funding your account. Choose a deposit method that you trust and are comfortable with. Double-check the recipient details and transaction amount before confirming any transfer. Once your deposit is processed, you're ready to start buying cryptocurrency. Remember to start small and gradually increase your investment as you gain experience and confidence. Section 5. Timing the market or riding the wave. Exploring investment strategies. Now comes the exciting part, investing in cryptocurrency. But before you jump in, it's crucial to have an investment strategy. This plan outlines your goals, risk tolerance, and approach to buying and selling. Two common strategies are short-term trading and long-term holding. Short-term trading involves buying and selling cryptocurrencies quickly to capitalize on price fluctuations. It's a high-risk, high-reward approach that requires close market monitoring and technical analysis. Long-term holding, also known as hodling, involves buying and holding cryptocurrency for an extended period, often years. This strategy aims to benefit from the asset's potential long-term price appreciation. It's considered less risky than short-term trading, but requires patience and conviction in your chosen cryptocurrencies. The best strategy for you depends on your individual circumstances, risk appetite, and investment goals. Consider your financial situation, time horizon, and knowledge of the market before deciding on a strategy. Section 6. Don't put all your eggs in one basket. The power of diversification. Imagine putting all your money into a single stock. What happens if that stock plummets? You lose everything. The same principle applies to cryptocurrency. Diversification is crucial in any investment portfolio, especially in the volatile world of crypto. This means spreading your investment across multiple cryptocurrencies. Don't put all your faith in one or two coins, no matter how promising they seem. Instead, allocate your capital across a variety of assets. This mitigates risk, by reducing your exposure to the performance of any single cryptocurrency. Research different cryptocurrencies and their potential. Look beyond the hype and focus on projects with strong fundamentals, active development teams, and real-world use cases. Diversifying across different sectors within the crypto market can further reduce your overall risk. Section 7. Safeguarding your digital assets, hot wallets versus cold wallets. Congratulations on buying your first cryptocurrency. Now you need a safe place to store it. This is where cryptocurrency wallets come in. Think of wallets like digital bank accounts for your crypto. They store your private keys, which are essential for accessing and managing your funds. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are connected to the internet, making them convenient for everyday transactions. However, this connectivity also makes them more vulnerable to hacking. Cold wallets, on the other hand, are offline storage solutions. They keep your private keys completely disconnected from the internet, providing maximum security against online threats. Choosing the right wallet depends on your individual needs and risk tolerance. If you're actively trading or using cryptocurrency for payments, a hot wallet might be suitable. For long-term storage of significant holdings, a cold wallet is recommended.